Hello everyone, I'm Daniel Morris, founder of PropSwap. Welcome to Sustainable Economics, Real Estate Systems. Every Monday, we ask one question. When will the market actually be ready for the next generation of property technology? Thanks for walking the block with me. I'm currently building PropSwap, a platform designed to make buying and selling real estate simpler, faster, and more transparent. The goal of this show isn't to predict the future. It's to study how real estate, blockchain, and artificial intelligence are evolving and document the signals that are bringing us closer to the next generation of property technology. This isn't financial or legal advice. It's simply one founder documenting the market while building inside it. So, let's get started. This week, I found something I wasn't expecting. For months, we've been talking about tokenized real estate. But after reading this week's research, I started asking myself a different question. Why is blockchain successfully tokenizing almost everything around real estate, except the real estate itself? And at first, I assumed the technology simply wasn't ready. But the deeper I looked, the more evidence pointed somewhere completely different. Last week, Visa, MasterCard, Stripe, and Coinbase announced a new stablecoin initiative called OpenUSD. That tells me something important. The largest payment companies in the world aren't asking whether blockchain matters anymore. They're competing to build the financial infrastructure. Then, another story caught my attention. A company called Securities became publicly traded while also putting its own stock on the blockchain. Now, that may sound like a small story, but I think it's one of the clearest signs that tokenization is moving into mainstream financial markets. Then, I found the statistic that completely changed how I was thinking about this. Figure's HELOC product represents roughly 19.5 billion. Meanwhile, the entire direct tokenized real estate market is only about 280 million. Think about that. One mortgage-related blockchain product is roughly 70 times larger than the entire tokenized real estate market. I honestly didn't expect the gap to be anywhere close to that. And that's when my thinking changed. Maybe tokenized real estate isn't falling behind. Maybe the market is intentionally building everything around property first. Money, payments, credit, securities. If that's true, then property ownership isn't the starting point. It's one of the final pieces. Where I'm leaning. So, this isn't financial advice. It's simply where my attention is focused after reviewing this week's research. Blockchain infrastructure, green. I'm still leaning toward blockchain infrastructure. Every week we're seeing stronger payment systems, settlement networks, and financial rails being built. The foundation continues getting stronger. Real estate. Yellow. I'm still watching real estate closely, but I'm remaining patient. Housing affordability is slowly improving, but financing costs continue slowing transactions and development. For me, this is a market to prepare for, not rush into. Okay, market readiness. Artificial intelligence, green light. AI continues making steady progress by reducing paperwork, communication delays, and repetitive administrative work throughout real estate. The technology isn't replacing professionals, it's helping them work more efficiently. Blockchain infrastructure. Green light. Major financial institutions continue investing in blockchain payment systems, settlement infrastructure, and tokenization. And every week, the foundation supporting future real estate applications becomes a little stronger. Regulation. Yellow light. The regulatory picture continues improving. Stablecoins are gaining clear legal guidance, but the rules surrounding tokenized real estate are still being developed. We're moving in the right direction. We're just not at the finish line yet. Market demand. Yellow. Housing demand remains strong, but affordability and financing costs continue slowing activity. And that increases the long-term need for faster, more efficient property systems. PropSwap is red. PropSwap continues moving forward every week. Right now, my focus isn't growing as fast as possible. It's building the platform carefully, validating the technology, strengthening the legal foundation, and preparing for a real-world pilot before scaling. The market is maturing, and I'm making sure PropSwap matures with it. Estimated launch window. Based on everything I found this week, my estimated launch window remains Q3 of 2028. The date didn't change, but my confidence increased because we're continuing to see independent parts of the market mature in exactly the direction they would need to before a platform like PropSwap can succeed. So here's the question I'll be watching next week. At what point does all of this financial infrastructure become mature enough that property ownership itself finally begins moving on chain and at scale? If that happens, I think it'll be one of the most important shifts in real estate over the next decade. Thanks for watching, and I'll see you next Monday. I'm Daniel Morris.